Good morning, colleagues, and let me introduce myself first. I'm Rathin Roy. I'm director of this National Institute of Public Finance and Policy. And I'd like to welcome you all to the regulators workshop on FSLRC and the release of the handbook. I'd like to, on behalf of NIPFP and all of us, extend a very warm welcome to the Finance Minister of India, Mr. P. Chidambaram, who has very kindly consented to come and inaugurate this important workshop, which is, in my view, an important one because the perception of what is being regulated and how it is being regulated tends to be mixed at this stage of the evolution of regulation in India. So there's a long way to go, but an important part about reassuring people that regulation will happen in the public interest and consistently involves doing it by the book and doing it with a system of codified laws. The present administration has for a long time engaged on this very difficult task. You've all been part of it, and I'm very proud that NIPFP has been part of this also in this journey, which is in a sense culminating in a special milestone today. So on my behalf, may I wish you all a very productive engagement over the next 2 days. And I'll just take this opportunity, Mr. Chidambaram, to thank you for the support and guidance that you have provided NIPFP. It is quite remarkable to have a finance minister who is more tolerant of dissenting or differing views than most of his civil servants. And for that, I congratulate you and hope that this healthy tradition will continue, that you have set will continue in the days to come. So with that, again, let me please, on behalf of the Institute, welcome Dr. Chidambaram with a bouquet of flowers. And Dr. Chidambaram, we are all ears to hear from you. Please proceed to inaugurate. I just want to say one other thing, which I've been asked to say, and I'm very happy to say, which is that I understand that a guidance handbook to facilitate pursuing implementation of non-legislative recommendations has been provided to all the regulators. And after this, FSDC has advised to put in place an appropriate mechanism for each regulator or board to measure and benchmark compliance. Keeping in line with this decision, I'm glad to share with you that the MIS handbook is now ready, and may I now request the Honourable Finance Minister to release the handbook to Dr. Vadhavan.
Good morning to all of you. Dr. Rathin Roy, participants in this workshop, representatives of the various regulators, other professionals and stakeholders, friends. This is the first workshop on the implementation of the non-legislative aspects of the FSLRC recommendations. Is it working? I doubt it.
Yeah, I think it is.
Is it working? Okay. This is the first workshop on the implementation of the non-legislative aspects of the FSLRC recommendations organized by the NIPFP, and I appreciate the effort taken by NIPFP. You are all aware of the FSLRC recommendations, so it's not necessary for me to dwell at great length on the recommendations as such. I think it's important to know the magnitude of the task that we are addressing. As I pointed out in earlier workshops and earlier interventions, the Reserve Bank of India goes back to 1934. The Insurance Act is of 1938 vintage. The Securities Contracts Regulation Act is 1956. So many of them are very old acts and were passed by Parliament or the legislature at a time when we did not have those markets, and our understanding of whatever markets existed was very, very different. from time to time, these acts have been amended. But these amendments were necessarily forced by circumstances. You felt an immediate need, or you noticed an immediate problem, therefore you amended it. I don't think anyone took a holistic view of what the act was, what it should be, and looked at amendment in a very comprehensive manner. But that's the way Parliament legislation is amended in virtually all countries. It's only once in 20 or 25 years that someone sits down and does a comprehensive review of legislation. So as a result, these acts have been amended at different times by different governments under different circumstances. So it's very difficult to find any philosophy or a consistent approach in all the acts. Each one is intended to guide and control and lay down the rules and regulations for one regulator without looking at what the other regulator was doing or should be doing. Now, obviously, as a result of that, there are regulatory gaps. And these regulatory gaps have been exposed from time to time. In the 1992 scam, the stock market scam, and then more recently in the what is called as the chit fund scam. We found that there was no one regulating them. Or if anyone was regulating them, he was regulating aspects of them, and there were huge regulatory gaps in which many of these Ponzi schemes fell. When RBI tried about 10 years ago, or 7, 8 years ago, to look at systemically important non-banking financial companies, and they identified a few, they found again they were taking advantage of regulatory gaps. I think those regulatory gaps are still there, and FSLRC recommendations must be looked at to see how much of those regulatory gaps can be plugged at this time. Now, the FSLRC has found that the current legislation are not adequate. They have proposed Indian Financial Code. Yesterday we had a round of discussion with some people who are associated with writing that code, and there were two views. Is it possible to attempt something so ambitious as a unified financial code, or is it more practical to attempt at legislating separately for each market or for each sector or for each regulator, weaving into it common principles or common provisions? We did not reach any conclusion. The idea was not to reach a conclusion, but the idea was to debate the pros and cons. And not so much the desirability, but the practicality of legislating an Indian financial code, given the kind of composition that we have in Parliament today. We have also to learn from international experience. All over the world, countries are attempting to strengthen their financial regulatory framework. Some of them have created new agencies. Some have conferred additional powers on existing agencies. Some migrated to a new model of a unified authority, then migrated back to the older model. Some have hybrid models. Australia, I'm told, set up a new Financial Inquiry Commission. So I think different jurisdictions are making different attempts to strengthen their financial regulatory framework, and if we aspire to be a modern, strong, large economy, we should not fall behind. The underlying objective of the FSLRC recommendation is we must have a strong institutional foundation for our financial sector. You are aware that the FSLRC identified 9 key tasks of the financial sector. These are: 1, consumer protection and competition; 2, microprudential regulation; 3. Resolution. 4. Systemic risk. 5. Capital controls. 6. Development. 7. Monetary policy. 8. Public debt management. And 9. Foundations of contracts and property. The basic approach of the Commission, in my view, has been the following. Firstly, it has advocated a non-sectoral approach. Current laws are made for each sector. Commission has advocated a non-sectoral approach. Commission has advocated a principles-based approach. Thirdly, Commission has recommended establishment of independent regulators based on a clear mandate, powers and accountability. There was some debate yesterday, and it is debatable whether the Commission has recommended a unified regulator plus the RBI, or has it actually recommended many agencies which have some kind of regulatory powers. And fourthly, the Commission has favored a strategy of ownership neutrality. We have identified in the Ministry the non-legislative aspects of the FSLRC recommendations, which are broadly in the nature of governance-enhancing principles for enhanced consumer protection, greater transparency in the functioning of financial sector regulators in terms of their functioning, better reporting system, greater clarity on their interface with the regulated entities, and greater transparency in the regulation-making process, which is mandated through mandatory public consultations and incorporation of cost-benefit analysis. With a view to facilitating the task of regulators and help developing a uniform rationale-based understanding about the non-legislative governance-enhancing principles, a detailed guidance handbook has been prepared, which essentially includes governance-enhancing provisions and recommendations. At the 9th FSDC meeting, we decided that all regulators will make an attempt to comply with the non-legislative aspects of the FSLRC recommendations by June or July this year. I have got a feedback from most regulators. While many of them are in agreement with the suggestion that the non-legislative recommendations must be implemented by June or July this year, some of them have raised doubts, questions, and therefore it's necessary for us to sit with each regulator and try to clarify those doubts and egg them on the path of implementing the non-legislative recommendations. I'm told that even now regulators go through making regulations without mandatory public consultations and incorporating cost-benefit analysis. I'm told that with a view to ensuring coordination between the regulators at the operational level, the non-legislative aspects are also being discussed in the Inter-Regulatory Technical Group, IRTG, which is housed in the RBI. But some other regulators, such as the IRDA, have set up their own committees to examine the feasibility of implementing the FSLRC recommendations. But I think we should not tolerate any attempt to either dilute the recommendations or digress from the path of implementing the non-legislative recommendations. I think government must keep an eagle eye on all the regulators to ensure that the non-legislative recommendations are implemented in a time-bound manner. Government intends to concretize the institutional structures through task forces on some matters which are identified with the FSLRC. These are on Resolution Corporation, FSAT, Financial Data Management Center, and the Public Debt Management Agency. It is my desire that we move forward and set up these 4 institutions as quickly as possible. They may require some legislative changes, but I think we should go ahead and make those legislative changes, even if the larger goal of enacting an Indian Financial Code will take some time. It's important that the Resolution Corporation, FSAT, Financial Data Management Center, and the Public Debt Management Agency are brought into existence as soon as possible. I'm sure, given the substantive and practical wisdom behind the recommendations of the FSLRC, the government that will come into office after 16th May will pursue its implementation at the earliest. I'm sure this workshop will be useful for you and help clarify your doubts on implementing the governance-enhancing steps recommended by the FSLRC. I look forward to the outcome of the deliberations and, in course of time, the implementation of the FSLRC recommendations. I wish you the very best. Thank you.
Thank you, Finance Minister, for those that overview of where we are in the journey, and I think the priorities that we need to agree on to make this happen. Indian Financial Code notwithstanding, there are 4 or 5 concrete areas where I think consensually progress can be made, and I think we all join you in hoping that that consensus will be attained through the political transition that lies ahead of us. With that, we conclude our first session. Please join us for tea outside. Thank you.